My name is Leanna Haakons. I am a best-selling author of my book, Young, Fun, and Financially Free.
Good afternoon. My name is Coleman, and I am the Director of Advertising and PR for Extra Co Consulting.
I'd like to welcome Mary and Leanna here. We'll just get started. Mary, can you give us a quick introduction to why banks should consider millennials as a target audience?
I think the largest or the biggest reason to target millennials, the Generation Y, is because it's literally the largest generation in the US population today. And so if you're talking about banking in the US, I mean, that's a pretty important market. Besides that, back in the dinosaur days, that's my time frame, referrals walked in or contacted you through word of mouth. Millennials actually changed all of that. So social media and influencers on social sites take a front row seat. And when it comes to earning that buyer's confidence, it should be your foundation of your marketing strategy. And gaining those referrals basically is very, very important. And you're not going to be doing it by word of mouth.
I have to agree. Leanna, would you like to introduce yourself and why millennials are important?
I sort of have a unique background in that I've actually worked in the space. I am a millennial, but I also work in finance, so I kind of know how the brain of an organization tends to work. And this whole online space and influencer space really is such a task for people that have come from institutions that are so traditional as banking. But it's no secret, obviously, this $70 trillion wealth transfer that's happening by 2030. And the neobanks, the challenger banks, they're going after that money. And they started doing it years ago. And the banks have sort of, fallen behind on that a little bit. So just purely from a market perspective, that $70 trillion is something that, every bank needs to be going after if you want to stay alive after 2030, if the neobanks and challenger banks are trying to take that market share as well. So I think it's really important that we do look at millennials. They're going to have 5 times the current net worth that they have now within the next 10 years. So who's going to take those assets under management? I hope it's some of you.
Someone will. I'm telling you, someone will. That's a very big pie that I'm sure that everybody would like a piece of. You're working with a lot of these banks at the moment. How do you think Leanna, how do you think partnering with them is an advantage?
Like what Mary was saying in her introduction, the traditional way of word of mouth referrals and, daddy's broker, just putting your money with daddy's broker, that is not the case anymore. Daddy's broker is not even working anymore. So he's retired. So millennials need to find a new way to build trust with their financial services providers, and the digitization of that world, which we all now know, which includes obviously influencers, but online banking services. 80% of retail banking clients, they say that using the mobile app is their number one way of communicating with the bank. And so really now more than ever, the banks do need to put pedal to the metal to, 1, being digitized in as many ways as possible, and 2, working with influencers, because those influencers to the millennial generation are the ones that have built the trust. Trust with a bank is the number one thing that keeps the unbanked community unbanked. It keeps millennials from using traditional banks, and they go toward neobanks and these new challenger banks because they either feel like they can't trust a traditional bank, or these newer challenger banks haven't screwed it up yet. So they still have trust because they're online, they're talking to millennials. And that's really where influencers that have built credibility over the years of giving free education, free value-added advice online, that's how they're building trust. So it's a great way for banks that haven't necessarily been online creating content for years to be able to partner with those influencers to have that ingrained trust that the influencers have already built.
As you said, influencers give these banks leverage. They've actually built up the trust over time, and this is the opportunity for the banks when there are shared values for there actually to be leverage.
my heart goes out to the smaller institutions, those that are below $1 billion. They really are the ones you just are rooting for to survive. And so I'm going to give some tips on ways basically for those smaller institutions. But if you're just getting started and you want to start using influencers, my first recommendation would be to go to your employees and your own staff. And these influencers, or your advocates and experts to your content strategy, should be individuals that you've gone in and really looked at their social media and have vetted out. I call them your Paul Revere networkers. That Paul Revere networker could really elevate your impressions and really grow your network so that you could grow your loans, grow your deposits, and have, your customers or prospective customers truly embrace your brand. The second step would be to engage your lenders, your mortgage professionals, your commercial lending officers by helping them set up their social sites to promote your brand and services. And it kind of helps you keep it a little bit under control. And then the third step would be to really research one of your customers that could be very active in the community and that you could actually pay them to be your influencer. I know our affiliate, Extraco Banks, we actually sponsor a country singer, a very popular country artist. She has been a customer of Extraco Banks for over 20 years. And she has a very large network of fans that she uses to promote our brand in Central Texas. And she is considered to be what they call a mid-tier influencer. So our brand does a little bit of paid influencing, but we do a lot of non-paid influencing.
And there's a balance between the two of them.
There is, yes.
Absolutely, as you goes along. What type of, you talked about mid-tier influencers. So how do you categorize influencers?
And so there's actually 5 categories. And I'm going to kind of break this down by categories and the social outlet. A nano influencer has about 1,000 to 10,000 followers. And so if you were to engage a nano influencer and you wanted to use them to do posts on Insta, you might expect a cost of around $10 to $100 per post that they might do for you. Which is very affordable, even for the smaller institutions. A micro influencer has about 10,000 to 50,000 followers. And that post, if they used YouTube to post a video, that could run you anywhere from $200 to $1,000 per video. Then you have the mid-tier influencers, which I mentioned that our institution was using, and they have about 50,000 to 500,000 followers. I mean, that's a large network. A post on TikTok would run you anywhere from $125 to around $1,200. Then you've got macro influencers, and they have a network of about 500,000 to 1 million followers. A post on Twitter might cost you around $1,000 to $2,000 per post. And then, of course, you've got the mega influencers. These are your movie stars. These are the people that are really in the business. And a post on Facebook could literally run you $25,000 or more. So they've got 1 million plus followers.
Interesting way. I've actually never heard that before. So I actually understand the bands of it, but it was very cool to actually hear your view of the world in terms of how they're broken up and things like that, which really leads me on to the idea that there are a lot of myths around influencers and what they are able to do and how they're able to do what they do. Leanna, you are one. So what do you see of the myths out there and how we can potentially bust some of those up? Because in my experience with marketing, a once-off post is maybe creates a little bit of a wave, but really isn't going to be very impactful overall. But it was really cool the way that you did that, Mary. But so what are some of the myths, Leanna?
So I would say actually that what you just mentioned is probably the first one, that results are immediate or can be immediately tracked and measured. And it really, especially when you're first starting out on online content, or even if it's just not online content, if you're doing in-person events and speaking and, maybe a free workshop or something, stuff we haven't seen for a while since COVID. but is that the results will be immediate, and we can look at this spend in our marketing dollars and say, was that worth it? Well, it takes a lot longer than that. It does take true collaborative partnerships with influencers, online and offline content. Obviously, a lot of the things that people are doing right now are focused on online because everything has been digitized, because we haven't had a lot of in-person contact. But it really is a long-term process. So you can't expect to go out and spend $10,000 on influencer marketing with a few different people and see that you've had 5,000 new retail banking clients sign up right away. And anyone that works in marketing knows that it used to be 7 points of contact, then you would retain a client. But now with all of the digital distraction, it's more like 14. And I know that's such a colloquial thing to say, like the 14 points of contact or whatever, but it really is true. And there's so many options now for retail banking clients to be with a challenger bank or a traditional bank, or whatever they want to do. There are so many options and distractions that it does take a lot. It takes consistency. So that would be the first thing I would say, is that results are not immediate. It is a long-term plan, part of your marketing plan, and something that you can't just stop doing if you don't see it immediately, because digitalization of financial services is not going away anytime. So you have to just maybe start small now and just consistently keep doing it, and know that that's a part of your bigger marketing plan. And the second one I would say is that it's all about the numbers. A lot of people think that, if we go and get like a big mega influencer with 1 million followers, and Mary was giving an example, like they tweet one thing or they create one YouTube video, you could, as the marketing team, be like all fingers crossed that it's going to go viral and it's going to blow up. But that's usually not what happens, right. And so, you don't want to put all your eggs in one basket. You definitely want to spread it around, work with different types of influencers. If you're in the financial space, maybe you want to work with some influencers that are well respected in the financial community, so that people know that they actually have credibility, they know what they're talking about. And then some that are more like Mary gave a really good example of a bank that's working with a country artist, not a financial influencer, but it's an artist that has trust within the Texas community. She's known, and she happens to have actually been a client of the bank for 20 years. She's not just saying, hey, I found this new bank. Like, she actually has been a client there for 20 years. So that's an amazing combination of someone to work with as an influencer that maybe isn't a direct financial person like me, but she has really good credibility within her community, and they trust her, and she's relevant. So it's really good, I think, for banks to work with a mix of both types of influencers, people that are just of the millennial age that resonate with millennials, but also from the educational trust and credibility side, you want to be working with financial influencers that have clout in the community, credibility, accreditations, or years of experience and that type of thing. So those, I would say, are the two biggest, is that results are not immediate, and it's all about the numbers. It is way more about consistency than it is about the numbers.
I so want to high five you. I said, which is people, yeah, that's it. Said to people, when you choose to do social media, whether it's your own social media or work with influencers, begin with the end in mind and start the way you mean to finish. Because the fact is, if you don't do that, then basically you're just digging a hole for yourself that you'll probably fall into. We have time for one really quick last question. And I think what most people would be really curious about is trends. So Leanna, I might start with you, and then Mary, if you could talk about any other trends that you're seeing in the influencer space or millennial marketing. Because I know we're talking about them being the same thing, but they're not. So any trends, Leanna, that you're seeing going on at the moment?
Yeah, so in terms of like the next big products and things that I think that from a development perspective, maybe banks and credit unions should focus on is number one, I would actually say, well, mobile banking. I already mentioned that 80% of retail clients, particularly again in the last 2 years, say that they prefer using mobile banking. That's their number one source of contact with their bank. You can even see that so many bank branches have actually closed down in the last 2 years. Do we think those are going to reopen again? Maybe, maybe not. I would bet on probably not. So if you don't already have a mobile app for whatever products you're offering, even if it's a very, very simple app development, it's important to have it there so people can use mobile banking. A lot of Americans are in more rural areas as well, and that's a big issue with the underbanked and unbanked community. Is the closest major bank They might have a minimum balance, which is one issue, but they might also be 25 miles away or 50 miles away. So having a mobile option to sign up for an account, sign up for your products and services, ways to verify yourself and your security and your person online or through the app, all really, really important. And that can be set up from a technology perspective, fairly basic. It doesn't take necessarily a lot in terms of the development, but it's important. That's the number one thing I would say. Second, I would say is high yield savings accounts. So Goldman Sachs has come out with Marcus, which is a huge thing they're marketing toward millennials for a high yield savings account option, which obviously, is a parlay from a high yield savings account, which let's say your emergency fund money, which is the first thing any personal finance influencer or expert tells young people to do, is first get yourself out of credit card debt and save for your emergency fund that 3 to 12 months. There's, all types of recommendations of how much money that is, and put it in a high yield savings account. Most of us say, I'm sorry to the banks that are giving out, that 0.05% interest rate right now, but we tell everyone, put that emergency fund in a high yield savings account. So Goldman has done has created a good product line with Marcus for that. So that's something I would suggest everyone to do, is get a high yield savings account option within your bank. And some of the other things just coming out that I see is really interesting. Obviously, any type of investing education and investing platform or partnerships, even if you don't want to offer the actual investing platform yourself, partner your community bank with a Fidelity or a Robinhood type bank. Like, partner with someone else that's doing something that you're not going to be doing because of whatever your constraints are, and find ways to work with them so that you do the retail banking side for that client. You funnel to them the investing client, because every single person in their 20s and 30s that are children of baby boomers and the Xers and millennials and Zs, we're all going to start investing if we haven't already. And the last 2 years, again, really just showed that with Robinhood and their successes. And I would say another couple other very smaller things, but definitely something we're seeing so much of, is installment loans. So Affirm, Apple Pay, every website I go shopping on now, whether it's like Gap or J. Crew or Best Buy, they all have these installment loan options. As a personal finance person that's trying to incentivize people to, reel in their spending, I don't love that. But these installment loan programs are huge. It's not going away. Apple Pay has just done a huge rollout of their installment options. So that's going to be really big. And I don't really know how banks should be tackling that. But from an educational perspective, at least, they should definitely talk to people about, what does it mean when you have an installment loan? And no, it's not free forever. They're going to start charging you interest when you're not making the payments. And that's the big educational point. Anything servicing student loans and debt, mortgages for first-time buyers, all really big areas for product development and opportunity as well.
Absolutely. It hit that nail on the head. Mary, any trends that you're seeing in the marketing area as banks are trying to get to these millennials, or as Leanna said, into the product, any trends that you're seeing?
So I think a couple of important things, because Leon mentioned some really great information there. I hope everybody took that at heart and really will take some of that and run away and do some changes in their institutions. But a few things on the marketing side, of course, rewards. People still love rewards. And I think designing products that include rewards in some facet, and I don't mean debit card or credit card rewards where you have to call somebody and set something up. I mean something that is delivered at the point of sale, and no one has to look back. It's automatically loads into your bank account, and you don't have to do another thing with that reward other than earn it and keep earning it. Rinse, repeat. And then something along the lines of everything. Millennials really like their subscriptions. And so some subscription-based products and services might be down the line, I could see coming up. And so maybe, and Leanna mentioned this earlier, is partnering with some fintechs, start attending those fintech conferences and seeing what new fintechs are out there, because there is a lot out there. One of the things that I really like from a product focus, I believe it's PNC Bank that just released, they have this overdraft service that they release that it alerts you you and you've got 24 hours to respond to it before they actually charge you an overdraft. That is huge for millennials. They love stuff like that. So again, focus on products and services should be key, and make sure that they're easy to use.
Brilliant. Ladies, it was lovely hanging out. Amazing content. We really hope everybody out there is going to be able to, as Mary said, take some of this to heart and be able to target millennials in a very consistent and productive way so that you guys can grab part of that pie.